Hello, this is Lynn, and today we're going to talk about how you read a balance sheet and what exactly a balance sheet is. For many business owners, balance sheet doesn't really have a whole lot of validity to it. It's confusing, the numbers don't mean anything, there's pluses and minuses, and the one that I'm showing you right now is got a little bit of all of that. What you need to know about the balance sheet is it is a snapshot of your company. It changes in the very next time you spend money. This balance sheet will change. It's always fluid, it's always moving. But here's the basic part of a balance sheet. The assets part of the balance sheet talks about what do you own, O-W-N, what do you own? So in this particular case, you own money in the bank. You own accounts receivable, which is money your customers owe you. You own your tools. You own your vehicles. This paid by shareholder, that's a special category that we are going to bypass for this particular instruction. The liabilities and the equity are two sections that are kind of lumped together. So the first one we're going to talk about is the liabilities. The liabilities are what do you owe? O-W-E, what do you owe? And you'll start to look in here. There's accounts payable, which is money you owe to vendors. There's a Visa card, which is money you owe to a Visa person. There's a TD loan, which is a loan. In this particular case, this is a loan for a truck. There is GST, which is money you would owe to the government, and a shareholder's loan, which is money you owe to a particular shareholder. Now you can see that there's some negatives. So for example, in this case, if you look at the TD loan, you can see you still owe $37,587. But this one right here is a negative, and that basically means that the government owes you. So if you were to do your GST return today, you would get a refund check for $2,048.93. So you have to know whether it's a positive or negative, and sometimes when it's a negative, those numbers just don't make sense. So for example, look at this accounts payable. If an accounts payable is what you owe somebody, how can that be a negative? The answer is actually really quite simple. What if you bought something and you put $2,000 as a down payment because they required that money but you haven't received the goods yet? So this would be a classic case. Accounts payable would be $2,000 because you've actually paid it out but you don't have receipt of the actual product, and therefore it would be a negative $2,000 on your books until you receive that product, until you get the bill for that product, and then it fixes itself. So in this particular case, minus 1,500, there would be something that there's a deposit paid and no bill is received. That might sound a little upside down, but it's actually an excellent tracking mechanism to make sure that your books are correct, because stuff like that you really can't lose. You don't lose $2,000 in the shuffle because your books will always kind of tell you the story. So liabilities is what you owe outside to various people. So in this particular case, if I am the business owner, I can see that I owe $34,585.52 to third parties. So today, if I closed my business today, that's the money I would owe in order to be square. The equity is kind of like your house. When you buy a house, and let's say you paid $500,000 for your house, you put $100,000 down for your house, you would be left with a balance of $400,000. Correct? Well, the $400,000 would be what you owe in your mortgage, so that would be like a liability. But the $100,000 is the amount that you have left in your house. It's your equity in the house. And businesses are almost identical. So this equity portion here is fairly geeky, but it really just talks about what the equity. Rarely will business owners use this particular section, and always bookkeepers and accountants will use this section to do some stuff that we do. Here's the important number for you to know. This number right here, see that number, 7,100? If that number is ever a negative, it is cause for concern and cause for you to have a conversation with your accountant. So that's really what you're looking for, is just to make sure that this number is not a negative, and it's the total, not these individual totals, but the total one at the bottom. So that's really it for a balance sheet. But basically, when you're looking at it, you want to look at your assets. What do I own? And most people specifically look at these: what's in your bank and what's in accounts receivable, and what do I owe? So how much money do I actually have to pay out? One connection here for you to make, one last note. If you have watched our profit and loss sheet, you will know that what you make is not always equal to the cash that you have in the bank. Well, this section here on liabilities is really the reason why. Anything that you pay towards an accounts payable, a Visa card, a TD loan, GST, shareholders loan, etc., any money that you've paid towards these, you don't get to write off your books. It doesn't come off the profit and loss. Well, it kind of does, but sort of in a special way. So you just really need to understand how that affects your cash flow. So for example, if you watch the profit and loss one, you'll know that we had $49,496 in profit. But our example that we used in that video was that you had no cash at the end of the day. And the reason why, this is the money you made after expenses, and then you have to start to pay. You had to pay for all these expenses, plus you have to pay for everything in liabilities. So when you pay your Visa card off, $1,258, you don't get to write that off. So the balance sheet is really important to help you determine what your cash flow needs are and what your cash flow that you have available to you. And you should watch the profit and loss video. It gives you just a little bit more information on that. And if you need more answers, feel free. We have a couple of more videos that will explain a little bit more in detail how to read your financials. Thanks, and have a profitable day.